Cai, thank you for coming through. I imagine Johannesburg is not your home?
That's right, not my home, but almost like a second home now.
Okay, you can feel free to come and buy a home and stay here. We do need foreign investments. Remember, we're looking for $100 billion, and therefore any amounts that come in are very welcome indeed. Let's try to understand the global picture that you guys have seen in your latest research.
Yes, we're seeing a tale of two halves at the moment. When you look at the economy, what you're seeing in general is good news. The GDP growth is up and healthy. The indicators of the real economy look good. Job creation, wealth, even earnings levels and earnings growth, all healthy signs. But when you look on top of that, looking to things like politics, that's where you see the noise and the rhetoric and reasons for concern.
Would I be correct as a person living in a developing market to say that the picture you've painted is very much applicable to your developed markets and in particular to the United States? But when you look beyond the United States and you look into Europe and you look at what is happening in China, we've just had numbers now coming through from Tencent, things are not perhaps as rosy as they appear in the Americans.
It is the case that the US at the moment is leading the way. But I think there's enough out there in terms of synchronized growth to be positive on equities. Japan has just come up with a bigger growth number, and so is the UK. And job creation in Europe, although it's behind the US and the UK, it's catching up. Our feeling is that what's holding the market back is trade war rhetoric.
Sure.
And it's important to think about that journey and where we've kind of come from. I mean, what started off as washing machines and solar panels has turned into steel and aluminium, and now actual threats of 50 billion, 200 billion, and another 200 billion.
Yeah.
But with all that rhetoric and back and forth, what's actually been implemented is just 50 billion between the US and China. And to put that in context, the US economy is 19 trillion. 50 billion is just less than 1% of that.
Absolutely, we could use a bit of that though. We'll come back and talk about the politics in a second and its potential impact on the markets. But I wanted to talk about that economic base that you're talking about. Just how solid is it? And potentially, if we took out the noise from the politicians, could we go on, you speak about this old bull having still some life left, how much more?
Yeah, so as a whole, we're positive on equity markets, believing there is some life left in it. But we wouldn't just go off and buy a passive equity index. There are parts of the market which look expensive. So when we say that we are positive over the next handful of years about equity, we mean certain parts of it. So get a good active manager that can filter out the expensive stocks. So yes, there are utilities in there which look expensive, anything which is like a bond proxy, so some consumer staples. And likewise, some US tech names and also Japanese tech names have raced away from their valuations. But if you can filter that out and go into the real economy, sort of the value type investing of markets, there's plenty in there to be positive about.
Okay, so no big shake-up of that portfolio, if you like. There's some good things that are still remaining there. Let's talk about the politics. When Donald Trump came through, and I think we are all still trying to understand the man. When he came through, a lot of people said, this is a guy who talks very loud, and in terms of action, he actually just doesn't do the action. And what we're beginning to see actually is that he is following through on some of his rhetoric. I wanted to chat to you a little bit about just exploring the potential for this, number one, to have real impact on the markets, and then on the systems that you spoke about at the beginning that underpin the global economy.
Yeah, the perception of Donald Trump has changed from, is this just his election campaigning, to this is his style, to is it actually being effective, to now, yeah, maybe it can move markets. And I think the trade war example is probably a very good one, because behind there is a legitimate goal. Take NAFTA and China, so the relationship between Canada, US, and Mexico. That was written in the 1990s by Bill Clinton. It is out of date. And I think Mexico would probably agree with that. So there is reason to believe that it needs to be redone. The question is, how do you go about doing that? Does it need to be done through bluster and Twitter and election campaigning, or can it be done more calmly and quietly? Obviously, we've gone for the more nosy way. But the China-US one is a much bigger problem, because there's much bigger economies. But again, I think there is a goal there, which is in 2001, China entered the WTO, the World Trade Organization, and the world opened up to China. But I think it's fair to say that that China didn't really open up to the world. And along the way, there was probably some intellectual property gained by China, which hasn't been reimbursed. Now, there is a reason to readdress that relationship, but how you go about that perhaps hasn't been done in the most calm way. But I think if you want to be optimistic, he's shaking it up a little bit to be able to get to what is ultimately a reasonable goal. Yeah,
what is also shaking things up is a little bit, if you can give me a quick view, is the UK and the EU relationship. I mean, I think until a few months ago, people were saying the UK is going to exit and perhaps it will be able to negotiate some kind of deal that prevents a hard landing. But now, two views are coming into play. Perhaps it will not happen. And secondly, that if it does happen, it will not be good at all.
Yeah, the politics on the UK leaving the European Union has become more and more complicated, and that's an internal matter for the party in terms of they're creating their own problems in many ways.
Yeah.
I would say that the funnel of doubt has actually narrowed in that some of the worst outcomes and some of the best outcomes don't seem that likely anymore.
Yeah.
And instead we're going to get sort of a more medium-term outcome, which is a bit more related to not getting any of the benefits, but not really getting, but also losing some of what we had when we were in. It's one that it doesn't really have much economics behind it. It's a very politically motivated subject.
Absolutely.
And one will just have to watch, really, because predictions on it haven't been very successful.
Yeah, wherever there are politicians, of course, it gets very, very messy indeed. I have never heard a sitting president anywhere in the world calling a citizen, a voter, a dog. And I've just heard it. Carl, thanks for coming through. It's Cai Rees, Client Investment Strategist at SEI Investments.